What's up, everybody? This is Anderson, your mom's favorite licensed loan originator, NMLS 1917819. There's a lot of buzz and hype right now around interest rates dropping here in the near future. So I've gotten a lot of questions about refinancing or maybe taking out a second mortgage like a HELOC or a HELOAN. I just want to stop by and give you like the five biggest factors to determine if this will actually be in your best benefit. So, right, the first thing we're going to look at is going to be the credit score. So, just think about it like this: the higher the score, the better the rate you're qualified for. I typically tell my borrowers to aim for a 680 or higher. Now, when you're looking at a 740 or higher, you're going to typically get the best interest rates anyway. But the next thing we're going to look at is going to be your debt to income ratio. So, with your debt to income ratio, lenders want to see and make sure that your monthly debt, including your mortgage, isn't eating away at your income. So, you want to aim for 43% or lower. The next factor is going to be your loan to value ratio, which is pretty much if you owe more than 80% of your actual home's value, you may have to have mortgage insurance. The next thing is going to be the value of your home, right? So this is big because a fresh appraisal, is nice to have. But keep in mind that the lender or the bank that you're dealing with or that you may be getting a loan through is going to do their own appraisal. They actually may use a AVM, which is an appraisal valuation model. We have lenders and banks have their own AVMs, but consumers, you can go on Zillow or you can go on Redfin or Realtor.com, and they have actually AVMs that are consumer facing. So those are the things like the Zestimate or the estimated appraised value that you see online. Now, sometimes we can actually skip the appraisal, which can be your best benefit so we can get the loan done faster. But just keep in mind that just because you had an appraisal done a few weeks ago doesn't mean we can use that. Last thing is going to be closing costs. So closing costs are going to typically be in the range of 2 to 5% of the actual loan amount. So you got to determine if the actual savings outweighs the cost of the loan, because then it may not be in your best benefit. So like I said, refinancing can actually, help you out and save you thousands of dollars, but it only saves you if the numbers make sense. So check out those five things before you get started. Do a little shopping and get a few estimates. But if you want more mortgage information or tips, hit that subscribe button or just follow me.